Hey guys, welcome to a brand new year of trading. Have to say I'm excited about this one. After 2020 being what it was, it's exciting to be kicking off a brand new year and looking forward to some brand new opportunities in the market. So today I want to talk a little bit about some of the shifts that we're seeing in the market right now and some of the best ways to make money in 2021, which, spoiler alert, it's going to be a little bit different than the best ways to make money last year. So let's dive in and take a look at what's going on in the market and where our best opportunities are. So first off, I wanted to start by looking a little bit at last year, and this chart right here shows you just how dominant growth stocks were in 2020. As you can see, this is kind of the difference between the Russell 1000 Value Index and the Russell 1000 Growth Index. And this line right here shows us that growth stocks were almost 40% higher in 2020 than value stocks. That simply means that investors were putting money into companies that they expected to grow earnings, and they were basically leaving behind companies that were slow and steady and able to just make money in good times and bad, which is sort of an interesting spot considering how much volatility and how much uncertainty there was last year. But now we're already starting to see a shift in the way investors are looking at stocks, and we're starting to see a lot more money leaving the growth sector and moving into the value sector. Now, I wanted to talk really quickly about the difference between these two companies, because sometimes as investors, we get a little bit confused as to what we're investing in. When you invest in a growth stock, you're investing in a company that's growing really quickly, that something new is happening, and typically during the best of times, these stocks move sharply higher. The problem is that when things start to unravel, they unravel very quickly, and some of these stocks can be very vulnerable to sharp pullbacks of 30, 40, 50% or more. And so I think after such a strong year, some of these growth stocks have a lot of risk in them. At the same time, value stocks are companies that they generate a lot more earnings compared to the level of what you would have to pay to buy the stock. So you're basically able to buy more earnings for every dollar that you invest. Now, often investors look at value stocks and they say these are boring stocks, because typically these are companies that make money in good times and bad. There's not a whole lot changing from one environment to another. And I would say, yes, these are sometimes boring companies, but at times like right now, they're anything but boring stocks, because we're about to see a major shift in capital moving these boring companies higher, moving the stocks sharply higher. And there's absolutely nothing boring about 30, 40, 50% gains, regardless of what kind of company we're investing in. So today I wanted to show you 3 value stocks that I think will give you exciting returns in the year ahead. And so we'll jump right in here to the first one, and this is the name that you should be pretty familiar with, Coca-Cola. Now, Coca-Cola, ticker KO, obviously dropped lower during the coronavirus crisis, and they've had a hard time recovering simply because in a lot of ways, Coke's main business has been undercut. So Coke sells to a lot of restaurants that are no longer, many of which are no longer in business or not seeing customers come in day to day. And also Coke sells to a lot of sports venues and other big gatherings. And so those 2 areas of Coca-Cola's business have certainly been under pressure. But the company's profits are expected to pretty much fully recover in the year ahead. In the peak before the coronavirus hit, Coca-Cola was earning $2.32 per share. We should see that come back next year. And in fact, Coca-Cola could be quite a bit higher than that in 2022 and moving forward. And the market's already starting to show some optimism as far as Coca-Cola's return. So we saw Coca-Cola basically break out here in November, and now they've just broken out to a new recovery high as we entered the end of 2020. So I expect that momentum to continue ahead. Now, the neat thing is Coca-Cola pays a dividend of 41 cents per quarter, which gives you a 3% yield. So you're getting a great amount of income while you hold shares of Coca-Cola. And since the company's expected to earn, $2 plus per share next year, there's plenty of room for Coca-Cola to increase their earnings, especially once management becomes confident that Coca-Cola is going to be able to continue to grow in this post-coronavirus environment. So this is a great stock that I think we should see significant gains in, even if it is somewhat of a boring company moving forward. So not a boring stock at all. Second, this is Bank of America, ticker BAC. And banks are one of the areas that we're starting to see a lot more interest in recently. And that's simply because interest rates, market interest rates, are starting to edge a little bit higher. Banks are able to make a little bit more money from that. But more importantly, banks basically make money when the economy is strong. And as the economy recovers from the coronavirus crisis, Bank of America will have new customers. They'll also profit from the overall market moving higher and from more people investing in the market, which means that Bank of America can charge fees on like their Merrill Lynch broker platform. Right now, the stock is trading a little bit above 30, and as you can see, it's kind of broken out above this resistance area. And Bank of America actually gives you a 2.4% yield if you buy shares right now. They pay out 72 cents per share each year in dividends. And the thing that's exciting here is that there's a lot of room for Bank of America to increase their dividends because they're earning more than twice that much in profits every year. Now, it's going to take the Fed basically being able to give banks like Bank of America the green light to increase their dividends. But I think we're going to see that happen in 2021 as the economy recovers. The Fed tells banks, yes, you can go ahead and start paying out your investors a little bit more. And that increase in dividends is one of the catalysts that's going to drive shares of Bank of America higher. So I expect to see exciting profits out of this somewhat maybe boring bank. And then finally, the other stock that I wanted to show you today is Sysco, ticker SYY. Now, Cisco is a food company. So this isn't the Cisco router company. This is the food company. And yeah, they're somewhat of a boring company, but I don't think we're going to see a boring return out of this stock in the year ahead. Cisco offers a lot of food services or food products to restaurants around the world. And specifically, that business has been hurt because of coronavirus. But as with the vaccine starts to move its way through our population, and as people start to go out to eat again, Cisco's business will increase once again. The company earned $3.50 per share before the coronavirus crisis hit. So that was their annual earnings rate, and they were growing earnings every year before this crisis hit. I expect in the year ahead for them to recover to that spot as more people start going back out to eat again, and as the company's able to charge a premium on their products. Meanwhile, they pay 45 cents per share per quarter in dividends, which gives you a 2.4% yield. Now, one of the reasons that these yield stocks are going to do well in the year ahead is because investors are simply looking for places they can generate income. So the fact that each of these three stocks pays a dividend also gives us an extra benefit because those dividends are attractive to investors, and they're going to basically benefit from the shift of capital that's moving away from the volatile growth stocks and into more stable companies that have kind of been left behind. So these are three great ways to kick off your investment returns for 2021. And I look forward to sharing more ideas with you as we move through this year. It's going to be a great year. Happy New Year, guys.